Good morning, treasurers. This is your host Partha Shah from Knight FinTech, and you are listening to Knight Snippets. Here is what you need to know before going into trade for 2nd December 2021. In the international market, US Treasury yields were steady on Wednesday amid investor concerns around the Omicron variant and the Federal Reserve's plans to potentially taper faster than expected. US 10-year unchanged at 143 and 30-year closed at 177 on Wednesday. In the crude oil market, crude is trading at $69.70 per barrel. Omicron fear has brought oil back to $70. Crude short-term range seems to be 69 to 73. In the currency market, dollar index is pretty much in the range-bound direction, trading at 96.05. Short-term range for dollar index is 95.73 to 96.29. Tomorrow's NFP, non-farm payrolls, will swing the dollar index prices. USD CNY or Chinese yuan is at 637. USD INR with a high of 75.02 closed at 74.91. A meaningful close below 75. Support at 74.70 and resistance at 75.10. Trading strategy for the currency market. Knight Research was clear from the data that the USD INR weakness is over near 75.15 and it turned out the same story. Knight Research team expects some large rupee inflows for Star Health IPO and crude below 70 are INR positive. Expect USD INR to touch 74.70 soon, as we have discussed earlier, but square off your positions in a day as US NFP data can change the directions. As far as the domestic markets are concerned, in a major turn of policy decision-making process, yesterday Mr. Jerome Powell commented that the tapering of the central bank's asset purchases may be sooner. Jerome Powell also mentioned that this kind of high inflation can't be considered transitory. As you all know, Knight Research team has been vocal advocate against the transitory inflation theory, and now we may see a very rapid reversal of rates in US in the next 6 months. The fear of early unwinding is catching eyes from Indian bond market investors as well, and also RBI MPC on 6th to 8th of December 2021 are keeping traders away. 563 2026 closed at 568 versus 564 the previous trading day. 610 2031 closed at 635 versus 632 the previous trading day. Finally, public sector banks became net buyers with net gilt purchases worth rupees 1,349 crore they have been selling for the last 3 days. Whereas foreign and private sector banks were net sellers with rupees 1,236 crores and rupees 662 crores respectively. As far as the OIS curve is concerned, 1-year OIS at 425 versus 421, 2-year OIS at 475 versus 468, 5-year OIS at 534 versus 529. Trading strategy for the domestic bond markets. As the closing was above 634, you would have exited your positions and booked profits for 610 GS 2031. Now be wary of the RBI MPC next week and avoid taking any large bets before RBI MPC. The most probable outcome will be either reverse repo rate hike or status quo with future guidance on policy normalization. Under no circumstances the RBI MPC outcome would be positive for bond markets. Hence, stay away from the market until RBI policy outcome is known. Trading range for 610 2031 seems to be 634 to 637. Again, 637 becomes critical and one might decide to take a position in 610 2031 near 637. But be wary of RBI MPC and potential downside risk. Hence, according to our Knight Research team, stay away from positions. That's it for today. See you tomorrow with the new episode of Knight Snippets.